I'm Elisabeth Hayes, the Director of Lending at Verity Credit Union. Our asset size is $860 million. We serve just over 40,000 members in Washington State with a focus of BIPOC and underserved. Verity Credit Union began in 1933, and originally it was a credit union serving our postal workers. And over the years, it's grown to serve all of Washington State. I've been at Verity Credit Union for 6 years, and I love working here because of our mission of co-creating pathways to generational wealth. Building sustainable communities really resonates with me, especially with my focus in lending. What really sets Verity apart is the focus on people, planet, and prosperity. We have some really unique loan products, which include our bicycle loans, our solar loans, and our limited equity co-op. Our solar loans are really impactful to our members here in Washington State, not only for ecological reasons, but also to save money on utility bills. I feel like historically, we saw the number of members in our area that were getting declined for credit. And we really felt like there was something that we could do to make it more inclusive and look at outside of those outdated credit models and really finding a source that would allow us to have equitable underwriting. And so that's really what we were focused on. I think for us, really what was important is not replacing one biased structure with another. I think historically, credit scoring has had bias built into it, but we really wanted to find a way to pull in other data points that weren't part of that traditional credit scoring model. And so for us, it was really important to look at AI with the access of credit points and other data that wasn't just your historical credit scoring model. So for us, it was really important to be more inclusive in that way and see if there was an opportunity to expand the outreach that we had to our existing membership and future members as well. In looking at our portfolio and mission, we noticed a lot of our members were in the A+ and A range, and we really wanted to look at those tiers that were B through D and expand on those members and an opportunity to grant credit to them. So as we were looking for a partner, it was really important to also have a streamlined process. We didn't want to have an independent scoring model that wasn't integrated into our regular loan process. So for us, one of the major determining factors of going with Zest AI was the integration that we had with our current LOS and allowing the streamlined opportunity to have those decisions be made instantaneously as that member was applying for a loan. We did look at other options, but really what put Zest AI ahead was the number of data points and reporting that we would be getting with our partnership with Zest AI. We felt that that was really valuable to us for our future growth and examining new products that we could integrate into the behavior scoring model. So implementation with Zest AI was really seamless. We had meetings very regularly, got coached through how to create our bands within our LOS system, and we had a lot of feedback and partnership throughout the process. Implementation was really quick. We partnered with both Zest AI and our LOS, but it was a really light lift on any of our IT department. It was almost nothing. We had myself and a couple other folks involved in updating our lending system, but that was it. Zest AI's implementation process had little to no involvement with IT, so that was really important to us. We had a limited bandwidth in that area. I would say something that was unique about the implementation process with Zest AI was the core group of folks never really changed. We didn't get passed around a lot. It was just like we were assigned one group of folks and we were working with them throughout the process, so there wasn't a lot of guessing of who are we working with next, being passed off, and it was all the way through implementation and even through the QBR process. So we still have had the same Zest AI partners that we have at every meeting, and that's really important to us when we know that we have a true partnership in that way. So the QBR process with Zest AI has been a true partnership. It started pretty limited as far as our risk tolerance. We didn't really want to go full blown right off the bat. So what we decided to do is do it in increments. So every QBR, we would be getting data back from Zest AI that would guide us on what our approval ratios would be in different credit segments. And then we would be able to adjust what we wanted for our own risk tolerance to get those numbers up or pull those numbers back depending upon what our goal was. Yeah, something that was really unique with Zest AI is they utilized our existing underwriting guidelines and policies. So when we did have our QBR meetings, we were able to tailor the levers that we wanted for our approval ratios, and they would guide us in that direction. So if we wanted to see more approvals in one certain product, they would segment those out and say that we could do these types of changes to get our approval ratios up in any one of our products that we had implemented. Our ultimate goal with Zest AI was to look at an opportunity to replace our current scoring model. So when we first launched with Zest AI, we utilized it as an underwriting supplement to ensure that we would have more opportunity to approve more of our members. That's our goal, is to really not have FICO be really any part of our decisioning going forward. Since implementing Zest AI, we've already seen a significant increase in approvals across historically underserved communities. By providing access to credit for those who historically would have been declined credit, it's a gateway to generational wealth and financial security. It's important to Verity that we are a CDFI certified credit union, which allows us to offer more inclusive loan products. As a CDFI, Verity Credit Union is able to offer some really unique products like no minimum CDs, Sharia compliant loans, and our limited equity co-op program. By partnering with Zest and being able to lend in those deeper credit tiers like B through D, we are able to maintain our CDFI certification and apply for new grants that will allow us to impact our communities even more. The CDFI funding has allowed us opportunities like our microgrant program to lend to historically marginalized businesses that have an asset size of under $250,000. So instant decisioning was also another key reason that we went with Zest AI. We wanted to improve our instant decisions. Initially, when we went with Zest AI, we started with just instant approvals. But most recently, we've implemented instant declines to get our approval ratios up. Right now, we're about a mid 20%, and we're looking to go into 30 or 40%. So we think that with the instant decisioning fully implemented, that we'll be able to reach that goal. Through increased instant decisioning, we've allowed our members to have a more streamlined process, access to funds more quickly, and also increased our look-to-book ratios. Our membership has been affected by rising interest rates and inflation, which is why monitoring our delinquency and charge-off ratios is so important to us. During these challenging economic times, we feel confident in using the Zest AI model to continue making those loan approvals in those lower tiers. By using the Zest AI model, we feel confident in continuing to lend without taking on additional risks. In our partnership with Zest AI, we're also utilizing the portfolio management product, which is allowing us an opportunity to look at our portfolio in a way that would show performance for loans that we have granted, in addition to loans that we have not granted, and seeing how they're performing with both ourselves and other financial institutions. By utilizing portfolio reporting, it's allowed us to be more agile. We can see loans that we've approved, and we're able to monitor our credit migration and make changes based on the risks that we're seeing or improvements in the credit scoring. Through the Zest AI decision model, it's really allowed us an opportunity to streamline our loan process and give decisions more quickly to our members, saving them time. Really, I think what's setting Zest apart is that we're able to see what happens with loans that we approved and loans that we didn't approve, and see how they're performing based on that. So I think that is a uniqueness to Zest AI. There's just been a lot of fear in changing underwriting, how it's been done historically. And what I would say to that is, in order for you to change your communities, you need to look inward and make changes within your own credit union. I guess it kind of goes back to how much change are you really willing and wanting to make, I think is important. Because for us, it was more, we wanted to walk the walk, you know, so I think that it is trendy for folks to be like, oh, we want to serve the underserved, but it's like, this is taking that into action, you know? So I think that that's a lot of usually what they ask is, what changes have you made? You know, sometimes they'll get pretty specific in that. And, you know, it's just fear, because I think a lot of people have been in the industry for a really long time. And so changing that, what's been that historical tried and true underwriting process is scary. And it's just, I think the partnership, with Zest AI is really what's kind of allowed us to feel comfortable. AI is the new standard, and Verity didn't want to get left behind.